Hi guys, this is Lynn with Trade My Trades, sharing with you how I use the risk cash indicator to make money in the market. I wanted to create this video and share with the federal employees and those of you that are investing in the thrift savings plan and using some of the funds like the C fund or the S fund and the I fund and the G fund to manage your portfolio. Really want to talk a little bit about what the market did this week. Here's a chart, a weekly chart of the SPY, which is the S&P 500. And it closed over here on the right hand side. You can see it closed over here higher than it has in the past. It reached new highs and closed at new highs. And so the question at the water cooler at work is, what happens now with the election coming? Is the market going to go up, continue to go up, or is it going to go down? Guys, we don't know the answer to that. We don't know if the market's going to keep going up. We don't know if the market's going to go down. But we do know when we use the risk cash indicator that we are prepared. That's what's great about this system. And it's really great how we can self-manage our portfolios using the risk cash indicator. So I want to show you what I posted earlier today for the federal employees that are members of Trade My Trades and Premium Services. And this is kind of what we post every 2 weeks on the pay period. Right now, if you're in the C fund, it is showing that you should only be 79% invested and you should have at least 21% in cash. So 79% is the maximum. That's always a personal choice. But when we use the risk cash indicator, it's indicating to us that we should have no more, based on the price action, than 79% at risk in the market of our portfolio, and 21% in the G fund or in cash if we're investing only in the C fund. Now, when we go down and we look at the S fund, and there are some people that invest only in the S fund, they like the volatility that small caps represent. The risk cash indicator is saying to those folks that, hey, you shouldn't have more than 80% on the table right now, and you should be at least 20% in cash. And what's great about this, though, is if the market continues to go up, 80% of your portfolio is growing, and 20% is sitting on the sideline as a safety measure or as a margin of safety in case the market turns down. As of August 21st, if you're in the C fund and the S fund, it's telling you that you shouldn't be more than 40% in either one of those, and you should have at least 20% in the G fund or in cash. And if you're in the C fund, the S fund, and the I fund, it's telling you that 26% should be in the C fund, 27% in the S fund, and 27% in the I fund, and 20% in the G fund. Guys, that's how the risk cash indicator helps us monitor the market and manage our portfolio accordingly. We don't want to have too much at risk, but we do want to be in the market in case the market continues to go up, and we can profit from that. But we don't want to have so much in the market that if it goes down, we don't have money available on the sideline to invest more. And think about that. If we have money in the cash pool and then we have our pay period allocation or contribution, and the market goes down, we can use those two things together to increase our share value. And that's what we want. We want to accumulate as many shares as possible from now until the time of retirement. And we want to accumulate those at the best price possible. And that's what the risk cash indicator does for us. So guys, if you're using this method, it's repetitive. It does the same thing over and over. If it's telling you at today's price that you should only be 79% of the C fund, and it goes up and it comes back down to today's price again, it's going to tell you again that you should only be 79%. So think about this. If you like something like this as a tool for you, where you don't have to predict, you don't have to time the market, but it's a valid tool to help you self-manage your portfolio, then give it a consideration. Guys, if you like this video, if it's a help to you, consider liking, and also please, we'd love to have you join Trade My Trades. We'd love to have you subscribe to the channel. We'd like to do more of these videos, and it's great to be able to share with other people what we've learned and the success that we've had, and for retail investors particularly. You guys work hard. You deserve a methodology to help you take care of yourself and your future. So guys, thank you for joining us today. And it's always fun making money in the market.